What's up, ladies and gentlemen? It's your man's the trucking trader, and today I want to talk about the Nasdaq. I want to kind of do a analysis on it and give you guys some tips and tricks that I use to figure out where the market is going to go, what could possibly happen next week during the markets. I like to already have these things in my mind, even before the markets start to open up and start moving around. And this is practice that you as a beginner trader, or even if you're an experienced trader, if you're not doing these things already, I definitely recommend that you do it. So let's get straight into this technical analysis on the Nasdaq. And if you guys do not mind, make sure y'all click that like button, subscribe to the channel if you haven't already, and turn on that bell for all of these great videos that I'm going to be putting out there, right? So if you guys notice on the Nasdaq, this is the daily time frame. We are on an uptrend right now. So I told you guys in the last video that I made, I like to do a 20-day look back, sometimes a 40-day look back. So we are on the daily time frame, obviously, and you know, all of these candles, these might be around 40 candles. I'm not going to sit here and count them, okay? But I do want to point your attention to this range right here, this swing low and this swing high. And the reason why I want to point your attention to that is because we're going to put a Fibonacci on that range. So I'm going to go from right here, swing low, right? Remember, when you're using the Fibonacci tool, you're always going from left to right. So I'm going to go swing low to swing high, right? And I'm going to extend this out. So notice right here, so these green lines on my Fibonacci tool is just a standard deviation of my range, which means that if you guys zoom in to the price points on these green lines, that negative 0.5 is just half of that range, right? The -1 is just the exact range. It's just the equal amount of the range that I just marked out on my chart, right? So this is how you begin to know exactly where the market is going. So notice how it came right above, it came right below this halfway point, the halfway point of the range, and it started to reject. So this is going to be a important area for liquidity for us to take note of right here. Okay, so now that we're looking at this range, right, this range was already broken out of. So as I told you guys in the last video that I just made, make sure y'all go check that out if you haven't already. I try my best to give you guys some really good tips and things that I do on a daily and weekly basis to, you know, have green weeks in the market to unlock some of these funded accounts. Because the market have already broke out of this range, I am not going to refer to this range anymore. But the reason why I wanted to draw it out for you guys is to show you guys one way that you can use the Fibonacci tool to figure out where the market is going, right? Because all ranges are going to give you a price point of where the market is going to want to go. So you just have to learn how to use that with your Fibonacci tool. If you don't already, don't worry about it. There will be many opportunities for you to practice this, go into the markets and practice these things so that you can get good at doing them, right? So I'm going to, before we find another range, let me put a green line on this because I want you guys to remember that price point. All right, so we're going to put a green line on there. I'm going to delete this little circle and I'm going to delete this Fibonacci tool. So now we are on the 4-hour time frame. All right, so as I said in previous videos as well, I like to start on the daily time frame and then work my way down. Those are the sweet spot time frames for me, the 3 sweet spot time frames for me is the daily, the 4-hour, and the 1 hour. And I recommend that for new beginner traders to use those 3 time frames, because if you drop down on the 1 minute or the 5 minute, you're going to see so many different ranges. You're going to see so many different things. And as a beginner trader, it's going to be confusing to you. I'm not saying that those time frames don't work. I'm just saying that, you know, it will definitely be confusing for a beginner trader, right? When you're trying to learn price action and learn where the market is going, all right? So now that we're on a 4-hour time frame, I am looking at this swing low right here, right? We have a swing low right here. Then we have this swing high right here. Now I'm going to put a Fibonacci on this from this swing low to this swing high. We're going to extend this out right here. Notice how the market came right to this 50% level right here, right? It came to the 50% level at equilibrium, and then it bounced up, and then it broke above this swing high, right? So like I just said before, make sure y'all take note of this. If you're really trying to learn, if you're really clicking on these videos because you're coming here to learn, please take notes. Please pay attention as much as possible, because I'm truly giving the gems, and really this is all you need to do to become a profitable trader. Everything that I'm doing right now in this video, this is all you need to start practicing to becoming a good profitable trader. Trust me. All right, so on the 4 hour, we also have another range right here. Because this is the most previous range, this is the one I'm going to refer to right now. This is the one that we're in right now. Until the market breaks out of this range, this is the range that I will be referring to right here. So as you guys can notice on this range right here, we have a order block. Right, I'm going to put an arrow right here on the candle that I'm referring to where the order block is at. We have a order block right here, and then what we can do is we can box this order block up. Let's box this up. Okay, it doesn't have to be perfect, but I try to make it as perfect as possible. And the reason why is because I'll notice how I have a dotted line going through my box. The reason why I have that dotted line is because the midpoint of an order block, ICT refers to that as the mean threshold. And pretty much with any smart money concept, the midpoint is going to always be it's a very important level to fair value gaps, to order blocks, to liquidity voids, to new week opening gaps, new day opening gaps. The midpoint is always going to be an important thing for you to take note of, and that's going to help you become better at reading price action, right? And here's why. Notice how price did not hit the midpoint it did not hit that midpoint yet, right? The reason why that is so important is because from my experience, what I started to notice when I started to study smart money concepts is that when these things don't hit the midpoint, it typically wants to come back and at the bare minimum hit that midpoint, right? So what I'm going to note is this little zone, this little low right here. This is going to be liquidity for me. I'm going to note this as liquidity. This is definitely one of the areas I'm going to be looking at for liquidity. And then obviously right here, this high right here, the top of this wick, this is going to be liquidity for me as well. And essentially that's all I'm looking for when I'm looking at these ranges, right? I'm looking at what's in premium, what's in discount. Remember, my yellow line is the equilibrium line, right? That is the midpoint of the range that I'm in. Everything below that midpoint is going to be the discount zone. Everything above that midpoint is going to be what? The premium zone. So when the market comes down to the discount, we're looking for buys. When the market is in premium, we're looking for sales, okay? Unless the market break out of our swing high or swing low, then it's different. We have to wait on the sidelines for a new range to be created. Okay, so now what I'm going to do is I'm going to drop down into the 1 hour time frame. Right? So notice how on the 1 hour time frame, there's another thing for us to take note of, and that is another order block, right? This order block right here is another thing that we can take note of. All right. So I'm going to box this order block up. I'm going to box this up. Okay, I'm going to zoom in. Let's try to make that as perfect as possible. And I'm going to lock that on there. And then just for clarity purposes, let's make this order block green so we can know that we're looking for buys right there. Oh, let's go back. That's why we need to lock that up as well. Bam. Okay, so now we have these things locked up. So there's two liquidity zones that I'm looking at right now, right? And this is what I'm going to be looking at for the start of next week and all of next week, right? There's actually 3 points of interest that I'm looking at right now, right? I'm going to point them out to you guys. So first we have this liquidity down here, this little swing low right here. Remember, I told y'all an easy way to find liquidity is look for the swing lows and the swing highs, right? Then we have a swing high up here. This is going to be liquidity. And then we have another swing high right here. This is going to be liquidity, right? So now we have our range. We have the market boxed up. We know we're in between two order blocks. So there's only one or two things that can really happen. And that is what I would assume what may want to happen. I believe we might want to go up in here, right? We might want to take this liquidity out first, hit the midpoint of this order block, and then sell off, and then sweep this liquidity out right here, the sell side liquidity, and then after we take that out, eventually come back all the way higher, and then take this liquidity out that's all the way up here. And the reason why I have that for my analysis is because I don't believe, since we're uptrending so aggressively, I don't believe that the market is going to want to break out of our range. So I believe that this swing low right here will be safe. Now, obviously, it could always go down here and sweep this swing low as well, but I do believe this swing low is going to be safe. And one way to test this out as well, if we go back to the daily time frame, right, we can put a Fibonacci on the daily just to double check, right? So we have a swing low right here and the swing high right here. Now, once we go back into the hourly time frame, notice how, okay, so this swing low actually may not be safe. And that's only because it's in discount, right? So price could possibly even want to go down here and sweep this out as well, right? So these are the areas I'm going to be looking for as liquidity. Now, we can keep doing exactly what I just did on all time frames. Think about what I just did. The only thing I did was I put a Fibonacci on my range, and I found the premium and discount zones. And in those premium and discount zones, what was I looking for? I was looking for order blocks. I was looking for liquidity. I was looking for the midpoint of the order block, which is the mean threshold, right? Or the midpoint of the fair value gap as well. So this is what you have to do when you're trying to form a trade. And I like to do this all the time on the weekends just so I can be prepared for the week, next week. It always helps to be prepared. And then you can also just continue to drop down in other time frames and figure out, is there any other thing to look for? Notice how on the 30-minute time frame, the order block look a little bit different, right? It looked a little bit different than it looked on the 1 hour time frame. That is something you want to pay attention to, because the midpoint is going to be a little bit different. Now, if you're thinking about that, what I would do is I will always refer to the higher time frame. So the 1 hour order block is going to be more powerful than the 30-minute order block. But it's always good to note both of them, right? It's always good to pay attention to both of those things. So, and then on the 30-minute, do we see anything in discount that we could pay attention to? No. So we could drop down on the 15-minute and keep doing the same thing. But I want to, for teaching purposes, I want to stay on the higher time frames, the 4 hour, the 1 hour, and the daily time frame. So that is my analysis for the Nasdaq. Now, obviously, what I know, right, let's go back to the daily, because I want to remove this daily range. Well, I'm sorry, actually, we could keep it on there. No, let me remove it. Let me remove this. What I know is that we're eventually going to, let's go back to the 1 hour. So if you guys remember that first range that I marked out, I know that eventually the market wants to eventually go here. Okay, so we all know that the market is uptrending heavily and it eventually wants to go here. But what you cannot forget about is the liquidity, right? The market is always going to want to take out liquidity. So what do? Well, the only thing you should do is wait on the sidelines until a liquidity zone is swept, and then you eventually find a good trade setup for yourself. I always tell y'all, and this is what ICT taught me, so I'm just telling y'all the same thing that I learned from ICT. You always want to wait for liquidity to be swept before you get in the trade. So for example, you're not going to wake up Monday morning and say, oh, the trade it could go up here. I'm just going to take a buy and hope that it go up here. Or it could go down here. I'm just going to take a sell and hope that it go down here. Never trade in the middle of the range. Notice how price is in the middle of the range. You never want to be trading in the middle. You always want to be either in a deep discount somewhere down here or in a deep premium zone somewhere up here. Okay, so this is my analysis for the Nasdaq. What I want you guys to do, especially if you're a beginner trader, I want you guys to go into your Nasdaq chart. If you don't have TradingView already, download TradingView. I believe they have free services as well, so you don't even have to pay for it. But go into your chart and do exactly what I just did, right? Start practicing on these charts, because that's going to really help you become better at reading price action.